Today I want to talk about the market condition of the mortgages, mortgage industry, real estate industry in Ontario. For the past few weeks, we've been seeing a lot of changes in the market.
If you're someone that right now you're planning on maybe changing your house, transferring to a new house, or you are a first-time home buyer, depending on your specific situation, you might want to start looking at your options and see if this new rule is going to affect you.
Everybody thinks the same, and the predictions are that most likely they're going to continue to come down in the next few months. By saying that, I think prices are going to go up.
Right. Hi everyone, welcome back to Financial GPS. I'm here with my husband David and I'm Daniela. So we have been talking about for the past few weeks about everything that has to do with finances. We had some people come and like some guests, and we have talked about life insurance, car insurance, mortgages in Florida, how to do investments. And so we've had couple of people come to give you some information about, how to get started with your finances, what to do, what not to do. Even we've had recently somebody talk about car insurance, landlords, anything you can think of. And so today we're gonna be talking, just my husband and I, about some stuff that's going on with the real estate market, some questions that we've been getting from people. A lot of people are confused right now with everything that's going on with the interest rates that are so high compared to like years before, and just like the prices, the $1 million question: when is the right time to buy or sell? And just some changes that are coming up next year. There's like a few changes that are gonna affect some people when it comes to purchasing, or maybe if you want to like sell your house and buy another one. So we want to get this out there just so that people are prepared, people know what's happening, the changes that are coming, and how everything it's getting affected by these interest rates. Now that we saw that there was an interest rate cut the other month. So we want to just talk about that a little bit, just to clear of some questions that people are having. And we hope that this podcast has been beneficial for you, that you have learned a little bit with all the guests that we've been having, and that if you have any questions, that you can contact us or any of the people that we have had here that work together with us.
Yeah, and that's the main reason that we have those people, right? Because we work with them, we trust them.
Yeah.
And we know exactly how they do things. So I think it's really important, because we took everything serious.
Right.
Since we came to Canada, we learned all this financial guidance, and the people that we met who help us out to learn all this information, we have to be able to accomplish a lot of stuff. And that's exactly what we want to do. We want to give back and show people out there how things are done properly.
Right.
And hopefully everybody can, whoever watch our videos, and they can like us and follow us, so we can continue doing this. Today I want to talk about the market condition of the mortgages, mortgage industry, real estate industry in Ontario. For the past few weeks, we've been seeing a lot of changes in the market. Like this market changes often. I always talk to my clients, and I said every single week there's new rates, there's new rules, and it's been like that since I started doing mortgages. For the past 12 years, when I first started doing mortgages, we didn't have the stress test.
Right.
And it was easier to qualify for a mortgage. Homes were more affordable. So something that I think about is like every single rule that they come out with, to limit people, to limit the purchase limits.
Yeah, like ability to purchase.
Ability to
Yeah.
purchase is it doesn't do anything. It affects the market
Right.
because prices go up, rents go up, and it's getting harder, and it's going to get harder. But at the same time, I think people need to be prepared and make the right decisions
Right.
when it comes to
Like choose your heart, right? Because
yeah.
paying rent is hard. Rents are so high right now that people could be paying like a mortgage with that. So choose your heart. I mean, you want to pay somebody else's mortgage by renting, or you want to pay yours, right? So it's kind
Yeah.
of that.
Yeah, and something that I talked few weeks ago on one of the podcasts is that the different programs that we have in Ontario. There's so many programs, there are so many options out there, but people don't look for them,
Yeah.
and they don't look for the proper guidance. So that's something that I like to do with my clients. I like to give options. The more options that I give to them, the better decisions that they can make.
Right.
So it's important to be proactive. Find out if you can buy a house right now. Don't wait, because prices are going to go up.
Right.
That's the rule. Interest rates come down, prices go up, and that's what we have seen in the industry for the past years. We've seen increases 2017, COVID. Prices go up, prices go down, and the reason is because of the interest rates, right? So if last month we noticed that the Bank of Canada, they dropped their interest rate. So variable interest rates are going down, and everybody thinks the same, and the predictions are that most likely they're going to continue to come down in the next few months. By saying that, I think prices are going to go up.
Right.
But there's new rules coming up in January of next year, and I think everybody needs to be prepared, and they need to know exactly what the new rules are going to be about.
Yeah, and I mean, like you said, interest rates are always changing. The prices of the homes sometimes they're high, sometimes they come down. Like we saw it in COVID. Maybe interest rates were not high at that time; they were very low, and people were like, wow, interest rates are so low, and they were buying and buying houses. But I mean, the prices were so high, and people were just getting into like wars, like offering more than the house was worth,
Bidding wars.
or like the listings that they had, and then they wanted $2,000, $200,000 above asking price, and people paid that. And right now you're able to see the consequences of that, of what happened. And so a lot of people are scared now. They don't want to buy a house because interest rates are high. But as we were talking the other day, I was telling my husband, I mean, what a lot of people don't realize is that interest rates, you can change an interest rate. If the interest rates keep going down, you can always change that when you get a mortgage, right? You can always renew your mortgage. You can have maybe a term for a year and then see what happens next year. But you have that price, right? Like right now, prices are good. I mean, they're not low because I don't think they're ever going to be like low. But they're affordable in terms that you don't have to go and fight with somebody else with other like offers, right?
Yeah.
Like maybe 2 years ago, you had this battling for like houses, and then you couldn't have any conditions on your offer. You had to go and no inspection. Sometimes people did no finance condition, and then they were like, right, stuck.
Yeah.
So right now it's mostly a buyer's market, we can say, maybe, that there's so many homes available. People are not fighting over a house. You can maybe negotiate the price of the house, maybe a little bit lower than what they're asking for, which was not the case back then. So maybe you can get a price for the house that you want. And yeah, maybe you're going to be paying a little bit of more interest rates than before. But like I said, you can always change that. Yeah. But you cannot change the price of a house.
Correct.
Right now, people that bought their homes 2 years ago, maybe $200,000 over asking price, that price is still the same for their mortgage. It hasn't changed just because the prices went down. So a lot of people right now that want to refinance, get equity, do something, they're not being able to do it, right? Because your house, the appraisal doesn't come matching what you buy your house for. So basically you have no equity. So these things that people need to understand and work with the market conditions as they are, right?
Yeah.
If you have the ability to buy a house right now and you're scared because of interest rates, know that that can change and you can change that later on, but you cannot change the price that you purchase a house for.
Yeah. And right now, it's not only about buying. When it comes to refinancing, when it comes to selling,
Right.
you have to make the right decision. And basically what's going to happen in January of next year, there's going to be a new regulation. And basically, there's a government office or department that they put the rules that the industry needs to follow when it comes to mortgages. And they're going to come up with this new rule called 4.5 loan to income limit. And basically this program or this new rule is going to affect a lot of people who wants to qualify for a conventional mortgage. So the conventional mortgage is a mortgage that you'll give 20% down and you don't have, or more, and you don't have to buy the mortgage insurance. You don't have to pay for it. Or the
So, I mean, if you're someone that right now you're planning on maybe changing your house, transferring to a new house, or you are a first-time home buyer, depending on your specific situation, you might want to start looking at your options and see if this new rule is going to affect you personally.
yeah, to qualify for a mortgage, they're more flexible than an insured mortgage.
Okay.
Now, an insured mortgage, this rule doesn't apply to the insured mortgage, but the insured mortgage, they have limits. And the limits are the following. The amortization is going to be for 25 years, but there's a new rule that they just came out with that they will allow you up to 30 years if you're a first-time home buyer and if the house is a new home, new construction. Insured mortgage. So this mortgage is the following. They'll give you an amortization up to 25 years. There's a new rule that they just came out with that you have to, if you're a first-time home buyer and you're buying a new home, pre-construction, they'll give you up to 30 years amortization. When it comes to the down payment, you can give 5%, that's the limit, or you can give up to 20 or 30 or 40, doesn't matter. If you can buy the premium if you want. So the more down payment that you give, the lower is going to be the premium. So I'm going to share on the screen what's the premium like. And so what's the problem with that is that the ratios are lower. So basically they want you to use 39% of your income.
So the ratios to qualify. Okay.
They want you to use only 39% of your income to qualify for the mortgage.
Right.
Compared to conventional that is up to 50%, or even some lenders allow up to 60%. So when it comes to what's the conclusion out of those two, they're going to limit everyone because or you buy through conventional, but there's going to be the 4.5 new rule, or you have to buy through the insured mortgage, which is they're going to give you limits. By saying that, I think it's going to be, they're going to tie up what we're doing with our money. And I think it's going to, make it harder for people to qualify for a mortgage. At the same time, I think this is going to affect the most, first-time home buyers. First-time home buyers that have more than 20% and they want to save the premium.
Right.
Yeah. So I think it's going to be a new those new changes are going to affect few people out there, and we have to work with what we have.
Yeah. So I mean, if you're someone that right now you're planning on maybe changing your house, transferring to a new house, or you are a first-time home buyer, depending on your specific situation, you might want to start looking at your options and see if this new rule is going to affect you personally.
Yeah.
If you want to make a change like that, not wait until it's done, because then it's going to be hard or maybe impossible to
Yeah.
make that change at that time. So if you're thinking about it, if you're thinking about maybe purchasing or doing something with your house, and if it might affect you, you might want to look into that and see to what extent that new rule is going to apply into your specific situation.
Exactly. So this new rule, the 4.5 loan to income limit, is going to be take effect next year, right?
Okay, January
January of next year.
Okay.
And I think it's really important to prepare. Like, think about it. What are your options right now? Should I sell my house right now and buy before next January? Should I buy my house, like if I'm a first-time home buyer or a home buyer, should I buy now or wait until next January? Where should I refinance my house? What are the options, right?
Right.
People need to be prepared for that. Emphasize that this program is going to affect conventional mortgage. It won't affect insured mortgage.
Okay.
So people need to be aware of that. And I think the most important part is that if you prepare yourself ahead of time in every aspect, that you're going to make the right decision. So that's what I believe.
Okay. Yeah. So if you're thinking about making a change like this, make sure you first see if this is going to affect you. It probably could be affecting you or could maybe not. So if you're planning on doing something to this year or maybe next year, just think about that change that's coming up and see if that's
Exactly. And of course, mortgages are complex. There are so many auctions, so many details that people need to sit with with someone that knows all this information and find out if it's going to affect them or not, right? Because it's complex, right? These programs, these new rules may affect some, others not. You need to find out exactly what are they, and that's what we're here for, to guide them properly. We've seen this before. We've seen the stress test.
it affected a lot of
If
people.
Fed, of course, and but at the main point is that prices, in my opinion, they're not going to go down. They're going to stay stable.
Yeah, a lot of people thought the prices were going to go down when they introduced the stress test. A lot of people were like, oh, I'm waiting for the prices. I've heard a lot of people saying that, like, we're going to wait for the prices to come down, and they didn't. Okay, so yeah, it did maybe have like a little pause on the market. It maybe made things a little slower, but then people got used to it. People got used to the stress test. It's now normal. It's okay. And they still were buying. So.
Yeah, exactly. And I think that's how we are, right? We follow the rules, right? We
get used to it.
We get used to it, and
yeah.
But the most important part is to make the right decision, because in my opinion, if someone wants to refinance, they should do it before January. If someone wants to make the switch, like sell and buy, they should do it before next January. And of course, if you're thinking about buying a house
for the first time,
for the first time, and you're going to apply for a conventional mortgage, you should do it before next January. That's a summary, because it's pretty complex. But I think if you're giving 20% down or more and you don't want to pay the premium for the mortgage insurance, then buy before next January.
Okay. Well.
Yeah.
So, thank you so much for being with us. Thank you for listening to all our podcasts so far. So if you have any questions, if you're thinking about buying, selling, you don't know where to go, you don't know where to start from, you're tired of renting, and you're maybe thinking about it, giving this next step, just give us a call. You don't have to necessarily do something. You can just inform yourself and see what your options are, see if this new rule is going to affect you, if you're planning on making any changes in terms of your current situation, if you're a homeowner, or if you're planning on becoming a homeowner. Don't wait until this comes out. Just figure out first and see if you need to do it before January. So give us a call and we'll be happy to help you. Thank you so much for being with us. And this has been another episode of Financial GPS. We'll see you next time.
Thank you.